The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you.
Good morning, everybody. My name's John Addis. I'm the founder and current editor of The Intelligent Investor. I'm here today with Graham Whitcomb, who is joining us from Canada. Good morning, Graham.
Hey, John.
It is morning for you over there, is it?
No, afternoon.
Afternoon. Okay. Yeah, why would it be morning when you're 15 hours behind or something?
I lose track all the time.
Yeah.
It's just one big day.
And we also have Nick Cummings here from Newcastle. How are you doing, Nick?
G'day, John. How are you?
Good, thank you. So we're here to talk about a couple of things this morning. Gaurav is away, so the amateurs are taking over. We're going to be talking about branding. This is something that I feel analysts often, I wouldn't say underappreciate, but don't really fully understand in the way that maybe I conceive of it, having worked in advertising at the beginning of what could loosely be called my career. What do you guys feel collectively about branding in terms of assessing a business? Graham, let's start with you.
Well, I think it serves, it always serves an important purpose for any business because it distinguishes it from the competition. It's what the customers are interacting with directly usually. It kind of sets the tone of what the customer is going to buy, sets expectations. And so, yeah, you can get things very wrong if your branding is different to what you're selling accidentally. You don't want people thinking they're going to the opera and actually turning up at a rock concert or something or other. So it's very important. And you can also see the brands that do particularly well, that really hold people's loyalty. They can just earn a fortune compared to all their competition. Apple being a good example. There might not be much difference in the technology, but there's a brand behind it that people love and respect, so they can charge a lot more.
Yeah, and I think when we all started out on our journey in value investing, where Warren Buffett is kind of the icon, and you often hear Warren Buffett talk about Coca-Cola and how the brand value is just incredible when you're really just selling sugary water. The product itself isn't anything without the brand. Nick, what's your view on branding in the role of analysis?
It's incredibly important, but I find it incredibly hard to put into sort of anything else you do as an analyst. So most of the stuff we do is quantitative. We look at financial statements, and this is the qualitative side. And most of the investment analysts are late to find brands. Brands pop up first, and then they're talked about as the next big thing. But that can also happen in reverse, as brands are sometimes, Blockbuster Video was one of the greatest brands for a while, and then Netflix completely destroyed it pretty much overnight. It only took 1 or 2 years. So that's what makes it hard as an investment analyst. Brands come, but they can also go very quickly.
I think we could talk about AMP in that context, a great Australian brand that really destroyed itself. It was an act of Harry Carey. But before we get into that, maybe we could just start with some definitions of what brand is, because I think a lot of investors, when they hear the word brand, they think of a logo. And I don't think that's it. My perception of brand is how the customers feel about a business. I mean, it's kind of an amorphous thing. So that would be an aggregation of all of the things that a company does externally and the perceptions that forms in customers' minds. And if you think about that definition in terms of AMP, when I arrived in Australia, I saw AMP up there with Qantas in terms of the strength of that brand. It had just been there forever. I think the company had been going maybe 150 years at that time. It seemed as though it was an impregnable brand in the same way that Qantas feels as though it's an impregnable brand. What were your perceptions of AMP 20 years ago? Nick, if you want to take that on.
Yeah, no, so I guess I'm a little bit younger than both of you guys, so I probably don't have the...
Hey, I don't have very many memories of 20 years ago either.
Have you actually heard of AMP?
Only briefly in passing.
As your grandparents mention it.
Yeah, it was sort of put up at this, financial, steward, and everything in finance sort of ran through AMP. You go there for insurance, your financial planning, your banking in some cases. And over the last decade, but it's pretty much ever since I think it listed, it's just gone backwards. And I mean, more recently, the way I remember it is they had this decision to open up their platform and to their own advisors and put external funds on there. They chose not to. They chose to promote their own products. And then they had to keep advisors there by offering them this ridiculous incentive package where, like, the buyer of last resort, which is now going to court, which they reneged on. And it's just been step after step of mismanagement of that entire brand. Whereas you look at that in against something like Macquarie, which it would have been much smaller than 2 decades ago. And they've been able to morph that brand and move into different products. And I mean, you always say put the customer first, but it can go both ways, I guess, particularly with Macquarie, because they do charge some obscene fees. But if you look at both those brands and you put them against each other, it's been this 2 completely different paths over the last 2 decades.
What would your take be, Graham?
Yeah, it's a good example of where a company a brand just isn't a static thing, that a company really has to nurture it just as if they were going to nurture a pot plant or something, because if it's not growing or it's not at least maintaining itself, you're going to be getting kind of a negative effect as it works its way through. And the other thing is that AMP is a good example of where complexity can really muddy that up, that you get lots of different messages being thrown at customers, and then that can impact their perception of the brand, which then feeds back to their inability to kind of use it as a distinguishing feature versus the competition. And yeah, that cycle kind of breaks where it's just unable to stand out from the crowd again because there's just too much complexity behind it. So yeah, it's an interesting example.
I think for me, a brand is, I mean, companies constantly talk about investing in their brand, and that's true. Companies should invest in their brand, but it's so easily done through behaviors and conduct that can really undermine a business from the inside out. And I think AMP is just a perfect example of that. And before the podcast, I made a list of the things that I could just recall that really just destroyed AMP's brand. And we can go back to George Trumbull, who was an American CEO of AMP probably 15 years ago now. He appeared on the front page of the AFR in an Indian headdress, which probably is inappropriate for a CEO. That was the first thing that I could remember about that business, where you go, that's a bit off, right? And then you go all the way through to the Royal Commission, where we found out they were billing dead people. They were charging fees for no service. There was a whole host of sexual harassment claims where those claims were admitted and proven, and the person responsible in one particular case, who was the head of infrastructure, I think, was kept on and given a promotion. There was bullying, intimidation by senior staff. If you go onto Glassdoor and look at AMP staff reviews, they're still saying pretty much the same thing. There was this real feeling that business was just a boys' club. And yet when you looked at the brand from the outside, it was this sturdy, enduring, trustworthy business that had been established a long time ago and had endured. And in the space of that decade or more, that whole thing was just destroyed. And I think this is one of the key things that investors need to appreciate about a brand, is that it's not, it gives you some resistance to poor behavior, and it gives you some defense, but it really, if you don't have that alignment between what a company does and how it projects itself visually into the world, then if those two things aren't coherent, you're just undermining it all the time. And I think this is an interesting issue as far as Tabcorp is concerned, which is something that you've been working on lately, Graham. How does the brand in a business like Tabcorp really help sustain that business in such a competitive field?
Yeah, that's an interesting one, because kind of like AMP, it's had to evolve quite a bit over the years. If you go back to the Tabcorp of 20 years ago, it was kind of on tracks. It had a real monopoly. There was no competition online or anything. It was a regulated monopoly. Then suddenly in the last decade or so, it's had to suddenly compete against all of these online brands. They were much fresher and were able to kind of start from scratch without a lot of those legacy, just whatever perceptions people had previously of Tabcorp would kind of carry forward, and these new guys could just start from scratch. I think Tabcorp still had a big advantage because even if everyone else was shifting online or starting up online, Tabcorp could at least kind of put itself in front of the customers that were going there by habit or whatever, betting through its shops, to pull them online. And so it also has one of the biggest market shares today online. But I mean that, and I think also possibly it matters what industry you're in, that Tabcorp, for all of its issues, it's in a bit of a kind of a sin industry where people may not have the same expectations for ethical behavior as as they would for, I don't know, some ESG stock. So I'm not sure how it plays out, but I'm guessing that people who are trying to place a bet on Tabcorp aren't thinking, oh, did the CEO get overcompensated this year? Or is there some sort of, like, they know what they're getting into. So yeah, it might not matter that much. But also I think the wagering business is just, there isn't a ton of customer loyalty there anyway. People are looking for the best odds, they're looking for convenience. And I don't think that Tabcorp brand is worth nearly as much as something that is much more of a trust-based business like AMP or like, I don't know, Coca-Cola, something you're going to be eating. Yeah, airlines. So yeah, I think they're kind of different categories, and that's what makes branding interesting.
How has Tabcorp responded in a brand sense to just the millions of online betting outfits that have started over the past decade or more?
Well, I wouldn't say they've responded particularly well, because they've lost market share basically from the get-go until maybe this last year or so. They have started to stabilize a bit, which is nice. It means we kind of found the bottom. But so I wouldn't say they responded particularly well. They often, and this is where they had kind of conflicting incentives, where they wanted people to stay on the track or in the retail shops because they were more profitable than the online guys. So they didn't really have the incentive as a startup to kind of shift all of their customers online by offering, I don't know, some sort of experience there that was better. So yeah, they've had pretty...
The innovator's dilemma in some sense in online wagering.
Yeah, exactly. They've been pretty kind of slow to the game. They picked up their game in the last couple of years maybe, but I think it was a bit of a forced hand where they were just losing so much market share for so long that they had to respond. Now they kind of pitch themselves as the convenient option. They certainly don't offer the best odds for most matches, so I think they're already selecting out people who are very price sensitive and who are just looking for the best odds possible. But they might be carving out a better brand now by kind of tailoring their promises to people, I guess, that better match what they can offer.
So your argument is that it's currently a hold, I believe, but it's not far away from the buy price. What's the investment case for Tabcorp now?
Well, the investment case is that it's, I think the main aspect to it is that over the past decade, as the company's been kind of, or all companies have been kind of clawing at market share online, the marketing budgets of these companies have gone through the roof, tripled basically. And so that's really had an anchor on earnings, but that's probably going to slow down over the next 5 years, I would say, just because there's been a kind of duopoly established between Tabcorp, Sportsbet, and then maybe some others that are much smaller. But yeah, and so now that that's kind of solidified, there isn't the need to push marketing so much, I think.
Mm-hmm.
And as that kind of eases off, you should get the earnings then returning to kind of above average growth because you've got this cost that's reducing. And that might have even got a bit of a bonus in the past couple of weeks where the government has come out and said, following a report into problem gambling, said that it was considering banning advertising for these brands, for all wagering brands. So yeah, it might be kind of a situation where the government is forcing them to reduce their costs. And as long as that doesn't have too much of an impact on the actual turnover of these companies, then you would expect their profitability to go up over time. So yeah, the bottom line is that the company might look overvalued now. It's trading on a PER of around 30 or so, around 30 times earnings. But if you look kind of 5 years away, those earnings are probably going to grow quite significantly. And yeah, it's not as expensive as it looks.
Nick, I would draw a parallel in my own mind between where Tabcorp sits and the sort of competitive environment in online gambling with streaming services, where there's this whole new market and there's a land grab. And at the moment, you're in the market's in a kind of state of flux. There's so much money being spent on customer acquisition. But eventually that settles down, companies withdraw, they realize it's too expensive, and you often end up with a cozy kind of duopoly where much better margins are made. Do you feel as though Tabcorp is in that kind of situation? And what kind of parallels would you draw, in a branding sense with some of the US businesses that you follow?
Yeah, I think it is, particularly if, as Graham was talking about, these advertising bans go through. It reminds me a little bit of the cigarette industry. So when advertising was stopped then in that industry, no other cigarette company obviously could market. And so the players that existed with the current market share just took more market share as the smaller players died. And I think that'll probably happen in online gaming or online gambling as well. And Tabcorp and Sportsbet in Australia are the ones that stand out the most to benefit. The parallels I would draw, in a sense, to Uber, actually. About 5 years ago, Uber was competing with all these players that are now all leaving the market. And the actual rides business in Uber is now quite profitable. It's actually quite a good business. And that's pretty much turned into a duopoly in the US between Lyft and Uber. And Uber, I think, has got far more than 50% market share. And I wouldn't be surprised. I think it's a similar market share, Graham can correct me, but with Tabcorp and Sportsbet, who already probably have 75 or 80% of the market. And if advertising expand, well, I think they almost go and get the rest as well because no one can compete. And then the other thing with the SIM industries is the taxes. So once taxes go up, the same thing happened with cigarettes. Only the biggest can survive. And this actually sort of happened to Uber a little bit. There was all these rules and regulations around where people could drive, what you had to pay certain cities, and that this lends itself to the biggest players, similar to a company like Airbnb as well.
Graham, just on the regulatory aspects there that Nick's touched on, do you feel as though, like, you hear the ACCC talk about competition and they would normally like more players in a market? But when you think about markets from a regulatory point of view, you can see that the regulators might prefer fewer larger companies than lots of smaller ones. Do you think that could help Tabcorp too?
Yeah, I think it follows a similar line of thinking to the casinos. You can see, some regions in the world, such as Nevada, will allow people to open casinos anywhere they want, basically. Whereas Australia has a different approach where it's kind of decided that every city has a monopoly or a near monopoly. And that's just a much easier thing to manage from a customer safety perspective, I guess. So it wouldn't surprise me if wagering goes the same way. They're basically just online casinos of a different kind. So they're almost the outlier now that there is allowed to be so much competition, at least by Australian standards. The gambling industry has historically been much more concentrated and regulated. So it wouldn't surprise me if it goes back to that. This has just been a bit of a Wild West situation as things as a new frontier was discovered.
Yeah. Okay, well, I think Tabcorp closed yesterday at $1.11. We've got it as a buy at $1, so that's something that members should watch out for. We'll be keeping a close eye on that stock and hope to put it on the buy list in the future. Let's move on now to some of the prices of small companies have really just shot up over the past month or two. Does this seem to be of any significance in terms of market psychology and where we're at now? We've seen some incredible price rises in some of the stocks that you guys follow. Maybe we could just talk about a few of them, Nick, the stocks that you've covered where the prices really have shot up rapidly over the past month or two.
Yeah, if I just look at the sort of the ones we have in the International Select Value Fund, a few have risen quite strongly. So how I'd look at it is the start of the year was mainly a relief rally in technology businesses that had been, particularly US businesses that had been they declined heavily last year. And then we sort of had, by about March, this AI boom. NVIDIA came out with this amazing update and everyone thought, continues to think AI is going to be the next big thing. And then over the last probably 6 weeks, small caps have really joined in the rally. And now it's just become the everything rally. I think I sent through something the other day on a business called Nikola, which is this, which is this terrible electric vehicle truck manufacturer in the US.
Nick, before you go on, let's just say that this business was a fraud.
Yes.
And that the founder of that company was caught showing the electric truck that they had driven, sort of charging along a highway, which wasn't actually a highway, it was a hill. And they were just rolling it down the hill.
Oh, wow.
Yes, yeah. And this is at one point a $15 billion business in that whole sort of SPAC and speculative run up in 2021. But that business was a $300 billion, I guess, sort of fraud 4 weeks ago. And now it's a $1.6 billion business. It's up 4 times in the last month. And this is right across the board. So the speculation in the market has returned. I read a stat the other day, retail investors are now transacting at the same levels as they were at the top of the 2021 sort of speculative bubble. So it's a bit of a worry, but because when you see all small cap companies go up, you assume it's just strong fundamentals, but then you look around and it's just everything as well beside it. But so Ali Financial's a company we own in the Select Value Fund. It does automotive financing and lending, and that's probably up 20% in the last month. Yeti, a brand again that we've talked about that may or may not endure, is the big risk there, and that's probably up a similar amount. So there's a lot of companies, and it's what I would say is it's just an everything rally at the moment.
Graham, have you got any comments on that?
Yeah, I mean, I agree with all of that. I think that there was a period kind of earlier in the year, at the end of last year, where there was this big kind of cloud of pessimism over particularly technology stocks, but small caps in general. And so the run up now, it might be partly just, it's hard to say whether things are kind of overshooting now or just correcting the excess pessimism of earlier in the year. But I mean, when you get those kind of stories of frauds that are doubling in price, it reminds me of what was the company a couple of years ago during the height, and it went bankrupt, and then people kept buying it after it went bankrupt.
There was a few.
Hertz was one.
Hertz, that's the one. Yeah. That kind of just smells of the same situation where people are just completely ignoring risk. They just want to buy. It could be that starting up again. Wouldn't surprise me if the AI thing does lead to another speculative boom, because it just has that nice story that you can take to an absolute extreme and just dream things go to the sky with it. So I get the sense that that's just picking up. We'll see.
I think that's true. I did a couple of stories on the looming AI bubble, and if you look at things like earnings calls, transcripts, and CEOs using the phrase AI. It's just gone from nowhere a year ago to just littered in almost every earnings call now. So
that's definitely
that's a good sign of where this is going. But it does seem that investor psychology seems to be very resilient, more so than it used to be. Nothing seems to be able to dent this enthusiasm. We've been sitting here waiting for cheap stocks, and there's been very, very few of them over the past year or so.
Yeah, it's a surprise. With interest rates higher, the maths is very simple, that all things being equal, the higher interest rate today versus a year ago should mean stocks fell 25% or something, and it just hasn't happened, which means they're 25% more overvalued than they were a year ago. So I don't know why that is the case, but people just keep finding reasons to be excited despite the negative news.
I mean, in some of these stocks, I look at a lot of the US home building industry and companies like Ferguson and Floor and Decor around it, but if you just single out the home builders, they're approaching all-time highs, and revenues and earnings are down, sometimes 30, 40%, and backlogs are coming off. So it's clear that rising interest rates are having an impact in the sector, but it's not having an impact on the stock prices. It's having an impact on the financials, but again, not the stock prices. It's kind of amazing, right? All these cyclical industries that you would expect to be hammered when interest rates go from 0 to 5%, and over one of the shortest times in history, or might be the shortest time that's ever happened. But it's just not happening.
It does make you wonder whether the underlying expectation is that interest rates are going to fall as quickly as they've risen.
That's what I kind of wonder. I feel like the most rational kind of explanation for me is that people have just become so used to low interest rates. Many investors now have only lived through periods of low interest rates. They don't even know what the high interest rates are like. And that they just assume that that's the norm and that this is the outlier, rather than us just being back to kind of average interest rates. They think this is somehow some huge aberration that must return to normal. And
normal is like 1 or 2% interest rates.
I think they might think that, but
and worryingly,
it's surprising.
It is, and they might be right.
Yeah, absolutely.
They might also,
Excuse me.
I think they might be right, but it's still like you can still get 5% on your cash in a savings account, or like there are still alternatives. So their opportunity costs are definitely going up, but they don't seem to be making that equation. I don't know, as you would expect. So presumably they think that stock prices must be growing at above average rates, or will grow at above average rates as well, because otherwise, why wouldn't you be switching from stocks to cash at the margin?
It's a confusing kind of environment. We did publish a story last week on some of the small caps that we liked individually that were showing some signs of life. I hasten to add that this isn't us jumping on the bubble. We've been covering these companies for a long time personally, but it does seem like there is some life returning to this sector. We do have also coming up this week is updates to our Ideas Lab stories. So some of the stocks that we've covered over the past few years, which I'll be contacting you guys once this finishes about getting some words off you. You don't know that yet, but that's going to happen. But it is an interesting time. And when you look at inflation rates, especially in the US, the rapidity of that fall over there, Graham, and you're probably closer to it than us, it's been quite astonishing. So you can see this is just giving some legs, some real legs to this rally.
Yeah, definitely. We'll see what the year ahead brings, but it will. I wouldn't be wanting to bet things are going to fall versus go up. We'll see.
No, not me. Nick, have you any comments on some of the US stocks that you follow? We can maybe address some of those big brand names that have really been firing the rally that got it started in terms of Microsoft and Amazon and companies like that. You got any comments on those?
Yeah, I mean, well, speaking about it's, we're talking about the small caps at the moment, but Microsoft hit an all-time high last night. They introduced, or they brought out yesterday, pricing around their artificial intelligence product, Microsoft Copilot, which would be like an assistant on top of their 365 package. I think the pricing was $30, and I believe this is US dollars, $30 a user. And so people are doing the numbers and saying
$30 a year per user.
I think it might be even per month, but I'd have to check.
Okay, right.
And people there was numbers out this morning on it, and I think there's about 350 million enterprise users. So even if 100 million users pick that up, and it's $30, like it's quite meaningful, and it probably won't cost them an awful lot to run. There will be some computing costs, but they obviously do that themselves through Azure. But it's just an example of, you're talking about artificial intelligence potential bubbles, I guess. But there are real products behind this, and just like the .com boom, there are real products and real revenue sources coming. But there's also all the other weeds, I guess, that are just jumping on, and including artificial intelligence in every presentation to pump up their stock prices.
Have you actually used any of their AI products inside Office?
I
to write emails and do presentations and stuff?
I haven't yet, but I've seen them pop up more and more. And they do, like, I've noticed it particularly in emails. It used to be that they might be like finish a word, but now they're like finishing a sentence or half a sentence. But it's coming. And then there's stuff like they can now summarize this entire call, but on Teams, of course. And so do the transcript, and I just think about how that could be incredibly valuable.
It'll be like two bullet points.
Yes, yeah, exactly. Yeah.
Graham, have you used any of Microsoft's AI products?
Not directly, but just for the first time the other day, actually, I decided to use ChatGPT to try and write an Excel equation, an Excel function. Based on a description. And so I had no idea what the function was going to be because it was very complex. And so I thought, well, I'll see what ChatGPT comes up with if I just ask it in normal language and then tell it to give me the function. And it made it perfectly. What would have taken me surely an hour or something to put together was done in a split second. So it's those kind of things. And I'm sure that'll be integrated into Excel. But it's the kind of thing where maybe that $30 a month, what I like about that is that it really is adding value on the other end to the user as well. That if every user of Excel can suddenly save an hour a day, then that's worth a lot more than $30 a month. So who knows what the pricing will be once people get familiar with it and can actually start seeing the benefits of using it.
It's an interesting thing because when I have used some of those functions, and the email client I use has got an AI option as well. And I tend not to use it because it just makes everything sound bland with the same kind of tone of voice. And as a word person, that sort of slightly offends me. And you guys are much, much better on Excel than me. But for me, just paying $30 a month just to mess around on Excel and actually, instead of me researching what function I need to use in order to do something in a spreadsheet, that would be exceptional value for money for me. That would save me hours per week. So there is some real value here.
Yeah,
definitely.
And I think that's the whole point. Like, so a lot of people saying, "Oh, not many businesses will adopt this. It'll be 5 or 10%." But there's a world where this can be half or even 80%. Particularly once it starts transcribing things, produces its own PowerPoints, which it can sort of do now. I've always got to remind myself that this is version 1,
right?
Essentially, you know what I mean? Like the one we see is pretty much version 1, even though it's 3.5, but the one they've released to the public. What's the version going to be like in 3 or 4 years? And how amazing is it going to be?
Yeah, it's not. I mean, my comments about the impersonality of the emails it might create for you is an example, I think, because if you write into ChatGPT 4 now, write 500 words on this in the style of John Addis, it'll come back with something that worryingly isn't far off my writing style, and I'm sure that will be true of you two too. There's enough body of work out there now with our names on it for it to make an assessment as to how we write. Obviously, there's less swear words.
It might know us better than we know us.
But that's even more worrying. Yeah. Okay. Well, it's fascinating times. I think we should probably wrap this up. Maybe let's wrap this up by talking about ARB and bring it back to brands. ARB is probably one of the best businesses Australia has produced, in my view. I don't know how you guys feel about it. And you look at that outward projection of the business in terms of its branding, and it is one of the most 70s logos you are ever likely to see, I think. And I feel as though it's a genius piece of branding because it hasn't been updated. It gives you that feeling that it's been there so long.
It's rugged.
The brand itself is rugged, and you expect it to see it covered in mud and sand.
Yeah,
and
we don't care about visuals. We're just here for...
That's right. We're here for something that endures, that's stable and enduring. And I think that the outward projection of that business's values through its products is just perfectly aligned with the way that brand presents itself on those little stickers in the back of four-wheel drives. It's just a perfect expression of what good branding is. But it only talks to the audience that appreciates it. If you're not into four-wheel driving, if you don't really care about that kind of stuff, and you look at that logo and you go, oh my God, how old is that car to have a sticker like that on it? So they really, really understand their audience well. And I suggest any member who's interested in diving into the world of brands and seeing some of the complexities and issues that it raises for investors, ARB is a really good example of how you can create a brand over time that really does speak to its audience, almost to the exclusion of those who don't understand it and don't need to understand it. It's just a perfect expression in the way that Apple is too, in a very different way.
Yeah. What's so amazing, I think, about ARB is they're selling very mundane products. Like, you can't really touch, feel, or use the bull bar, and you don't intend to use it. You don't really want to use it, right?
No.
Yeah. But they've been able to create a whole brand image where they can charge twice as much as the competitor. I remember doing a bit of research into it, and I went to one of their stores, and none of the items in their stores have a price tag. And it's not usually you see this in luxury fashion, because if you need to ask the price, you can't afford it. But that's not the case with ARB. What they're trying to do is create a conversation and create a customer service opportunity. So I have to go and ask, how much is this? Pretty much on every item. And then they can come along and say, it's $2,000. What are you doing? I'm going on a overland trip around Australia. Oh, well, you might need this as well. Have you thought about this? This is my favorite campsite. And just reinforce the whole thing that, this is a brand that's, well, I guess their marketing will get you there. And it's been like that since day one. I mean, the origins of the brand were, I think it was Tony Brown in 1975, drove from Victoria, the Northern Territory, and all these products fell off his car. They were just crap. And so he's like any good entrepreneur, he said, I'll do it myself. And that sort of endured, as you said, throughout its whole history.
Yeah. And also, I think the first time that we had a site visit, I think it was Gareth Brown, who's now an analyst at Forager, came down to Melbourne and went to ARB in wherever it was. I think it was in the western suburbs somewhere. And he just came back and he said, "Is exactly how I hoped it would be." And he said, "Well, what do you mean?" He said, "Well, I turned up at the car park and there were just four-wheel drives everywhere, and they were all covered in mud. They'd all been out four-wheel driving at the weekend. And I walked into the offices and the carpet was really grungy and horrible because they'd all been stepping their boots through the carpet, and the secondhand filing cabinets." He said, "It was just exactly what you'd want that business to be. They're not trying to create a fancy office environment. They're not trying to create an impression to the people who work in those offices. They all love four-wheel drives, and the expression of what that business is through the products, not the environments they're trying to create where you're managing those brands and those products." Yeah, it was a good example. All right. Well, I think we'll call it a day. Thank you, Graham, for staying up and showing us your nice trinkets in the background there.
Thanks, John.
Some fossilized agate or wood timber. And thank you, Nick.
Thanks, John.
Thanks, everybody. We'll be back again in 2 weeks.